play their tune, dance to the beat of the dead balloon. Find a rose, find a rose. Currency flows where the data unfolds. Find a rose, find a sing. Money moves on invisible strings.
Laura Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello, welcome everyone. Good morning. This is Kathy. If you can hear me, see me, give me a thumbs up. Let me know that everything's working out well and you can see me clearly. Say good morning, wave hello, give me an okay, anything to let me know that the stream is smooth, because we have a lot to talk about and I want to get right to it. But let me know that everything is going good. Good morning, Andy, Patek, Peter, Deep Sleep Music, Tom, Malungi, wonderful, John. Welcome everyone to our Monday Market Buzz, where we could talk about everything that is going on in the markets. Thank you so much, David. It was a much needed haircut, but yes, thank you, Tom. Thank you, David. Thank you, High Country. Okay. So before I begin, I always like to ask, who's brand new? Who's new to the room? Who's new to our Monday Market Buzz? Because I want to make sure that I give you guys all an extra love, make sure that I answer your questions and give you a shout out. So if you're brand new, let me know. Welcome, Omar. Welcome, Howard. Where are you guys tuning in from? Welcome, Nikki. Okay, this is a fantastic week to be joining us because we have so much going on. And in many ways, particularly for those of you that trade Forex, it's kind of much needed because volatility has really compressed itself and the market is desperate for a breakout. And this week could be one of those weeks that we get, a breakout given all of the big events that we have. Okay. Howard's in the UK. Omar's from Miami. I'm thinking about the warm sunshine right now. It's still very nice in New York, right? High Country. I live in New York as well, but long gone are the days of the beach and the pool. Welcome, Pavan. Welcome, everyone. Okay, so as I said, we have a huge trading week ahead of us. We have 4 central bank rate decisions. We have the U.S. retail sales report. We have a number of inflation as well as employment reports. So basically, data from almost every corner of the globe that could affect markets. And I'm going to give you guys a pop quiz. It's not a very hard pop quiz, but of the 4, who are the 4 central banks that are meeting this week? Just drop them into the comments. Let me know that you're paying a little bit of attention to who the 4 central banks are this week. Let's see who's the first one to answer. This is an interactive session. I like to ask a lot of questions to make sure that all of you are paying attention. Canada, US, Japan, G4, UK. Here we go. Howard's got it all up. Japan, UK, US, and Canada. And which of these 4 are expected to cut interest rates? Which of these 4 are expected to cut interest rates? Let's see if you guys can take a wild guess. Let's see. There are other central banks, like the Norwegian Central Bank is also meeting this week, but we don't really pay too much attention to them. Yes, US, Canada. Howard is spot on today. You are our MVP, answering all of the questions quickly and correctly. So yes, the Federal Reserve and the Bank of Canada are expected to cut interest rates this week. Obviously, the Federal Reserve is hands down the most important central bank meeting that we are watching because this is the first central bank rate cut expected from the Fed this year. Now, this is not necessarily the beginning of their easing cycle because it's almost hard to remember, but they actually began their easing cycle last year. I think many of you, who actually remembers that they began their easing cycle last year? Who remembers that the Federal Reserve actually cut interest rates last year? So be honest. Give me a thumbs up if you remember, a thumbs down, or raise hand if you remember. Who actually remembers that the Federal Reserve cut interest rates last year? Okay, good job, Zachary. Zachary remembers. Thomason remembers. Good job. I love that you guys do. Howard doesn't remember, and that's very, very honest. It seems like the past 9 months, a lot has happened in the past 9 months, and a lot of it so much has happened that has probably, created, there's so much in our brains about everything that's happened politically and economically and socially that it's, is almost hard to remember that they cut interest rates last year. But they didn't just cut interest rate once. They gave us a series of interest rate cuts last year. The Federal Reserve actually began its rate cutting cycle in September of 2024. We're going to look at charts. Yes, right before the elections, the Fed kicked off its rate cut cycle in September 2024. And then they followed up with additional rate cuts in November and December. Now, here's the big question. How much did they kick off the 2024 rate cut cycle with? Does anyone remember? How big was the rate cut back in September 2024? Come on, I'm sure some of you remember. It was a pretty big deal then. 50 basis points. Yes, 50 basis points. And that's what we're going to start talking about today, which is the Federal Reserve in September of last year surprised the market with a pretty big move, 50 basis points of easing, which was a larger. It was a pretty dramatic way, I guess, to kick off the easing cycle. So now they've taken a 1-year pause. Last time they cut interest rates was in September 18th. So it's just what day is today, the 15th, just shy of 1 year. And so the question is, not how much they're going to cut interest rates this Wednesday, but by how large will the interest rate cut be? And will it be the beginning of a series of interest rate cuts, just like we had in September? Now, many of you probably have the right answer to that already because the market, because if you joined me last week, we looked at CME Fed Fund Futures. I'm going to share my screen right now with you. So bear with me while I, just bear with me while I share my screen. I just need to move my panels around so I can make sure I still see your questions. All right, so I'm going to share my screen right now. Share screen. Entire screen. All right, you've got my screen. And we're going to type in CME Fed Fund Futures. So if you're ever wondering what is the market pricing in, you always can go to Fed Watch CME Fed Fund Futures. So right now, interest rates are at 4.25% and 4 to 4.5%. So interest rates are at 4.25% to 4.5%. Market is pricing in a 100% chance. 96.4 plus 3.6, not 100% chance that rates will be at least 4 to 4.25%. So 100% chance of a 25 basis point interest rate cut this year. So the market is pricing in 100% chance of a 25 basis point rate cut in September. Now, that's not what we care about, right? We care about two questions. Number one, will they surprise with the 50 basis point rate cut? Well, taking a look at this, you can see that almost no one in the market expects that. Most importantly, what this means is that almost no one in the market is positioned for a 50 basis point rate cut. The market is only positioned for a 25 basis point rate cut. So if we get a 50 basis point rate cut from the Fed, that is certainly going to be a massive, huge surprise. Now, so I think, we all agree 25 basis points is probably what's going to happen, even though you cannot rule out and we have to be prepared for the possibility of 50, because back in last September, the market also did not expect 50. The market was only expecting the first interest rate cut of the cycle to be a slow one, to be 25 basis points. So we have to be prepared for a bigger move. Now, by the way, for those of you that want to be prepared for FOMC Day, I am holding a very, very special session on FOMC Day. So please, what I want you to do is scan this QR code, put it on your screen, scan this QR code, register for the session at 7:30 a.m. We're starting live at 7:30 a.m. There, and you will also get an invite to our private Fed live trading session at 2 p.m. So make sure you register for it. It's completely free. So make sure you put your screen to the QR code so that you can register for that. I'm going to move this to the side as we look at, hold on one second. I'm going to move this to the side as we look at the rest of the Fed rate decision. So we've got this here. So make sure you scan the QR code. All right. And I'll pop that back up. So now let's talk about what is expected for the rest of the year, because this is what the market really cares about. Now, remember, 4.25% is where we're at right now. So what is the market expecting? The market expecting, this is where the jump is. The market is expecting and pricing in 78% chance of at least 3 interest rate cuts. So the market's pricing in that 75 basis points of easing from now to December. That means 1 interest rate cut at each meeting. 25 in September, 25 in October, 25 in December. So the market is pricing in 25 basis points of rate cuts. And it's almost, the market is pretty much fully priced in 25 basis points every single meeting. So this tells us that if the Fed delivers 25 basis points and then 25 basis points at every meeting, that's not really a surprise. I mean, that's already what the market expects. Another thing I want to call your attention to, and by the way, make sure you scan this QR code and register for the live session. I'm going to have Boris pop this into the chat as well, so that you can make sure that you have this link. Just give me 1 second to give this link to Boris, and then you can register for the live session, and you'll also get a special invite to our live trading FOMC. So anyway, back to the charts. I'm going to put up this chart here that I want to show you. This is the chart of, let's just make this a line chart. It's not necessary for this candles. Hold on. Yellow is just too hard to see. Let's just make this blue. Okay, there we go. That's what we want. This is a chart. Actually, this is not what I want. I want the yield. Okay, this one. There we go. This is the 2-year bond yield. The 2-year bond yield, let's go to, at the beginning of the year, was at 4, where's beginning of the year? Somewhere around here, basically 4.25%. So at the beginning of the year, the 2-year bond yield was at 4.25%, which is pretty much where the U.S. Fed funds rate is, which is 4.25% to 4.5%. Look at where it is now. Now, the 2-year bond yield is at 3.5%. What does this tell us? What does this tell us about what's priced into the market? This tells us that, make sure you scan this QR code. This tells us that the market, this is 75 basis points from 4.25 down to 3.5%. This tells us that the bond market has also already priced in 75 basis points of easing. So what am I getting at here? What I'm getting at is that for the most part, the market has completely priced in Wednesday's move and then the rest of this year's move. So this leads me to ask the question, where is the surprise? Where is the trade? Because what you may have noticed is that last week and the past couple weeks, we have not had much reaction to the weak US data, right? I mean, who's confused about that? Who's confused about the fact that we have not had much reaction to the weak non-farm payrolls report, to the weak jobless claims report, things like that? Why have we not gotten much reaction? And the reason why we haven't got a lot of reaction is because in many ways of this. Let me just move this to the other panel. The red line is the dollar index. The blue line is the 2-year treasury yield. And so, first of all, you can see that these are mirror images of each other. They pretty much move in the same direction. And so the reason why we are not seeing a big reaction is, number one, the market has already completely priced in the rate cuts. And then secondly, another way to describe this is that the dollar short trade is kind of overcrowded, because if you look at this chart from the purple line, the dollar, or the red line, the dollar has already sold off quite aggressively since the beginning of the year, meaning that everyone who wants to be short dollars in anticipation of the Fed rate cut has pretty much done so already. So where's the trade? If you want to know where the trade is, make sure you scan that QR code, because I'm going to lay out and prepare you for FOMC day on Wednesday. So Fed Day Live, I'm going live at 7:30. It's not a whole day session. I'm just going live from 7:30, 8:30 a.m. Unfortunately, my son has a doctor's appointment, so that's why we're doing it early. I'm going live from 7:30, 8:30 a.m. Make sure you scan this QR code to join that live session. I'm going to explain to you how to prepare for the FOMC day and what the trade is. And then at 2 p.m., we'll have a session there for those of you that registered there. So that is very important to remember when you trade, not just what the central bank is doing, but what is already priced in to the market, what the market already thinks is going to happen. And this trade, in many ways, is very overcrowded. And therefore, what you think is the opportunity may not be the obvious opportunity. Now, we have a lot of central bank rate decisions this week. And whenever we have central bank rate decisions, I always like to create these central bank tables to basically prepare you for the central bank rate decision, to basically teach you how to put yourself into the shoes of the central bank. So at first glance, I am sure that you can see that there's a lot more red than there's green, showing you that the U.S. economy has truly weakened since the last Fed meeting, where you see weakness in retail sales. And we actually get the latest retail sales report tomorrow. So right before the Federal Reserve meeting, we're going to get the latest retail sales report. So we'll get to see, has the weakness in jobs translated into the weakness in retail sales? So we'll get a good sense of that. And tomorrow's retail sales report will be very, very important. The labor market, we know, has already weakened already. And that, back when the Federal Reserve wanted to left interest rates unchanged, they said that, if the dynamics change, we're going to change our opinion. And the labor market has indeed changed quite a bit. But there are some problems, and the problem areas are quite concerning, which is that inflation is up. Look at the core CPI. It went from 2.9 to 3.1%. This should actually say dollar bullish, not bearish, but pretty much all of them are dollar bullish. Now, the Federal Reserve and every single central bank out there likes to keep inflation around 2%. So the core rate is well above 2% at 3.1%. And even the CPI year over year is at 2.9%. So inflation is a problem. And someone earlier said that we have stagflation. Stagflation, who doesn't know what stagflation is? If you don't know what stagflation is and you want me to explain it, give me a question mark and I'll explain it. Otherwise, I'm going to assume that you know what stagflation is already. So many people are worried about stagflation, and stagflation is a problem. So Bob wants me to explain stagflation. Wally, I love it. I love these question marks because it gives me an opportunity to explain this. Stagflation is basically an environment where you have a slowdown in growth, high inflation, high unemployment. And so, we aren't at 5% unemployment, but the labor market, we're not adding jobs. And so, and according to the last Beige Book report, almost all the districts reported no increase in jobs. So at some point, the no increase in jobs will lead to high unemployment because the lack of increase in jobs is going to lead to layoffs. So stagflation is this terrible scenario where we have high unemployment, weak to slow growth, and high inflation, and that is kind of the precursor sometimes to recession. And that is something that is very concerning. And that will create a scenario where even though inflation is high, the Fed has to cut interest rates. And so that is kind of the world we live in right now. As Fred said, stagflation is the problem that we live in right now. So we have high inflation, the labor market, back in 2022 when the Federal Reserve was raising interest rates into high inflation. Some of the problems that they were having was that we had a hot housing market, and the housing market clearly is no longer hot and is actually weakening with weaker housing market activity. And then we also have weaknesses in service sector activity and the economy in general. So this kind of validates why the Federal Reserve needs to cut interest rates. But as I said, the markets completely priced that in. We saw that in the Fed fund futures. We saw that in the bonds market. We saw that in the US dollar. So the trade may not be as obvious as you think, which is why I invite you, we need to spend a whole session talking about laying out the Fed's game plan. And that's what we are going to do. So make sure you scan this QR code, click on this link, and because we're going to need to spend an entire session talking about how to prepare for the Fed. So the next central bank that is expected to move on interest rates is the Bank of Canada. So now I invite you to put yourself into the shoes of the Bank of Canada. So I invite you to put yourself into the shoes of the Bank of Canada, and I ask you, based upon this table here, and I apologize for this, I'm going to move it out of the way. Based upon this table here, do you see more red or green for Canada? Do you see more red or green for Canada? Let me know. Take a wild guess. Do you see more red or green? Have there been more improvements or deterioration in Canada's economy? Red. 100% accurate. The last time the Bank of Canada met was in July, so not that long ago. At their last meeting, they actually paused. They left interest rate unchanged at 25%, at 2.75%. At the time, everyone pretty much thought they were done with cutting interest rates, especially since they had this number here. Look at this number here. What is this number I'm pointing at? 83,000 jump in job growth in the month of July. I think it was June or July numbers. I don't remember. But basically, they had a huge jump in job growth. Everyone thought with this jump in job growth, they were completely done with cutting interest rates this year. And at the time, they said the economy was showing resilience. There was a pressure on inflation. And so everyone thought they were done. But they also kind of qualified it. They said, nonetheless, if the economy weakens and puts further downward pressure on inflation, prices, and we see more problems, we'll restart cutting interest rates again. So the market went from thinking that they were done to now pricing in not one, but 2 more interest rate cuts this year. Why? Maybe it's because Tony said the Canadian economy is shit. And I apologize for my language. But, in many ways, that is the reason. If you put yourself into the shoes of your central bank, and a central bank has to react to the data, they have to react to reality. And as Tony, who lives in Canada says, the economy has gotten to the crap hole, because if you look here, we had a big contraction in retail sales in the month of July. Those job gains became, pretty much got erased in August. And inflation, even though the monthly rate is up, actually slowed. So pretty much across, and the building housing market activity weakened. So pretty much across the board, Canada's economy has turned. I don't even have this here, but their GDP number actually contracted. The quarterly GDP went to 1.2%. And we actually had a contraction in one of the monthly rates. So the economy has definitely weakened quite a bit. And the labor market is terrible. Pradeep, do you live in Canada? Do you or are you just chiming in on the data? Let me know. But the labor market is terrible, and they feel it because the tariffs are taking the sting. And so the market has gone from pricing in no more interest rate cuts from the Bank of Canada to pricing in 2 more this year. So let's pop on. Let's get rid of the dollar index. I'm going to go back to candlestick charts. And let's look at dollar CAD. So dollar CAD actually is rallying into the Bank of Canada rate decision. Now, of course, this is mostly due to the dollar trade. So when we trade CAD and you're trading these the Bank of Canada rate decisions, sometimes you have to look at the crosses, especially since the BOC rate decision is the exact same day as the Fed rate decision. So you're going to have to look at the crosses like EuroCAD. EuroCAD has completely priced in the Bank of Canada rate cut. But, if we look at the weekly chart, EuroCAD is at its highest level since 2009, which is actually quite incredible. So don't be misled by the movement in dollar CAD, but take a look at the crosses like EuroCAD, because that's really showing you where the real sentiment is. The market is very bearish CAD against the euro, against the Swiss franc, probably not so much against the New Zealand dollar, which is kind of interesting, and also not so much against Aussie. So as a trader on Wednesday, first off, dollar CAD is not a trade because the Bank of Canada rate decision is at 9:45, 10 a.m. The Federal Reserve rate decision is at 2 p.m. So dollar CAD is going to be frozen. Instead, the real opportunity will be in the crosses. But unfortunately, EuroCAD's already overbought unless the BOC suddenly says that, we'll cut interest rates once, or they actually don't cut. And any sort of less dovishness, there could be a very good trade in EuroCAD and CAD Swiss. But if they are dovish, then you have to look at the currencies that haven't moved as much, like Aussie CAD for the long side or Kiwi CAD to long side. That's why I talk about how positioning is so important, because you have to pay attention to position to understand where the opportunities are. And that's part of what we're going to do for the Fed on FOMC Day. So make sure you come and join me for the live game plan FOMC Day, because I'm not going to be trading at 2 o'clock. Boris is, and so you want to be prepared for the trade. Okay, so in addition to that, we have 2 more interest rate decisions. We have the Bank of England and we have the Bank of Japan. So this is the Bank of Japan. And as you can see, there's probably just as much red as there's green, probably a little bit more red than green for Japan. So the market was originally thinking that the Bank of Japan was going to raise interest rates this year. They're the only central bank that could potentially raise interest rates, but that's gone completely out the window. That's gone completely out the window because we have weaker retail sales numbers. Those have been quite horrid. Household spending, which is also a measure of retail sales, was weak as well. Inflation is down and falling and moving in the wrong direction. So overall, they are going to keep interest rates unchanged. That's part of the reason why the yen has been able to fall, particularly against the euro and against other currencies, because no interest rate cuts are expected. So, no interest rate hikes are expected. So nothing's expected from the BOJ this week. It's probably, the focus is going to be on the US dollar. And then we have the, where is this? Bank of England rate decision. Where's my Bank of England rate decision? Let's see. Right here. Bank of England. So the Bank of England rate decision. And if you'll notice, there are more green than red. The Bank of England, the last time they met, they cut interest rates. But the vote to cut interest rates was very tight, 5-4. Basically, 5 people voted to cut interest rates, 4 people voted to leave interest rates unchanged. So with that in mind, the Bank of England is pretty much done. This is a very big week for the UK. Aside from the Bank of England rate decision, we have UK inflation data, retail sales data, jobs data, and we have the BOE rate decision. So pound is trading at a 2-month high today because we're in an environment where the Bank of England is pretty much done and the Fed is getting ready to cut. So the market's pretty much, thinking that the pound is being bid. Even though we had weakness in retail sales, it's still positive numbers. Labor market activity has improved with fewer people filing for unemployment benefits. Inflation remains hot. It's increased, so they definitely can't do anything but the rates. Growth, PMI is not bad, and labor market activity, pretty much neutral. So pound, has risen to a 2-month high, best performing currency this morning or today. And it's really, the market thinks we could see more good data from the UK this week. So there's a lot going on the calendar this week, not including some other reports like we'll just go into it, like the jobs reports from Australia, as well as the inflation report from the UK. We already had a bunch of data being released. We had industrial production, retail sales, a bunch of Chinese data. And the Chinese data was all weaker than expected. The New Zealand data was also very weak. I want to point this out because both the service and manufacturing PMIs have now turned negative. So both reports are quite weak. And, I think definitely signaling a problem here for the for New Zealand and validating the need for additional interest rate cuts. We had Eurozone trade data, and that was weaker as well. Empire State this morning came out weak, so that kind of reinforces the dovishness of the Fed. And so later this week, tomorrow, we've got jobs data from the UK. We have the only important data from the Eurozone this week, which is the German ZEW survey, and that's expected to be weaker, although I think most of the Eurozone data is surprised to the upside, so I think there's room for an upside surprise. Canada has inflation data. That's going to be very, very important. And with Canada's inflation report, we're looking at weaker Canadian inflation data. U.S. has retail sales. Tomorrow's a big day. U.S. has retail sales. Canada has inflation data. It's a very, very big day. And then on Wednesday is FOMC day. But even though we have FOMC day, we also have UK inflation data. This doesn't matter. Final inflation data from Eurozone does not matter. So instead, we're going to watch UK inflation data, Bank of Canada rate decision, the Federal Reserve rate decision. Now, this is an important one because we've got the Fed funds futures being changed. We have the economic projections and the dot plot. So I'm going to make sure we prepare. We're going to talk all about the dot plot on Wednesday. We're going to talk about how the dot plot changed. We're going to talk about what changes to look for, how to react to the changes, because even though the rate decision itself has been completely discounted, what's going to matter now is the dot plot and what is expected. So be prepared for the Fed rate decision. I'm going to lay out the trading opportunities. Join me at a special Fed Live Day at 7:30 a.m. On Wednesday. Scan this QR code, click the link, register, and you'll get all the information there. We also have New Zealand GDP numbers. We have Australian jobs reports. So a lot of data this week. On Thursday, we have the BOE rate decision. No change is expected. Philly Fed now probably going to be quite weak after that Empire State Survey. We have Japanese inflation data, the BOJ rate decision on Thursday night. And then we end the week with UK retail sales numbers, Canadian retail sales numbers. So a huge, busy week for the markets. Make sure that you tune in to everything we say, and because it's going to be quite market moving. Now, technically, Eurodollar, upper right-hand corner. How much more can it go, right? I mean, this is what I mean by the markets being frozen in Forex. Forex markets have been frozen. Very little moves, very little volatility. Market itching for a breakout. For those of you that can see the trend lines, I'm sure you can see it quite clearly. Not, a perfect trend line, of course, but I'm going to roughly draw it, and you will see market itching for a breakout. Will the breakout happen to the upside? We'll have to see, because Fed rate decisions are so significant that it can easily lead to an up or downside break. So, fundamentals suggest that we should have an upside break, but the question is it priced in? We'll break that down on Wednesday before the FOMC. Dollar yen also consolidative range, pretty much got a triangle happening right here. Pretty much got a bit of a triangle pattern that's happening. Draw your lines from wherever you like, but clearly one thing is clear: the ranges are tightening and it's itching for a breakout. Maybe we'll have something on retail sales if it's horrid, but if we have retail sales and it's hard, it'll just probably take it to the bottom of this range, either the blue line of the trend line or the horizontal line, and then it's going to grind into FOMC. I'm not expecting much until after that. CAD rallying ahead of Bank of Canada rate decision. We'll talk about that as well. A little bit of head and shoulders expected there. Dollar Swiss already at the lower right-hand corner of the chart. So this is not a preferred trade unless the Fed surprises to the upside. We'll talk about that on Wednesday to talk about where the opportunities are. Make sure you clue that in. I'm going to leave that up as I talked about pound. Pound's already at the upper right-hand corner of the chart. So pound's already at the upper right-hand corner of the chart. We've got resistance at 138. It looks like it's starting to break out, but it's a lot going on for pound this week, so it can turn anyway. Aussie is already very, very bid, and so the upside opportunity is less than the downside opportunity. We'll have to see, but that's important because we also have jobs report from Australia. Kiwi, we are also probably going to consolidate, although Kiwi will probably underperform because we've had some pretty horrible data from New Zealand as well. So, we talked about so much. And I know that you're itching to trade with Boris. We'll go over what the outlook for NASDAQ as well as gold is going to be. I'm also going to share my views for NASDAQ and gold when we prepare for the day on FOMC day. I'm not doing it with you today because I want to see how the retail sales report fares tomorrow. I want to see the reaction. So I want to give you the real, day of opportunities where we talk about, what happened with retail sales, where we talk about how the market is pricing in, what the market is pricing in, how the market is trading right into FOMC. So make sure you join me. I want you all to take your phones out, to scan the QR code right now, and make sure you register for our live FOMC prep at 7:30 a.m. So make sure you do that, and then you'll get the link also for our private trading session for the 2 o'clock FOMC day when you join that session. So any questions? I'm going to invite Boris in. We also have the link up, Bitly Fed Game Plan 2025. If you want to just use that link instead. Any other questions? So I'm very, very excited about, Fed Day this week. It's such an exciting week with a lot of event risk. I can't wait to show you everything. The heat map, that's something that's for BK Trader members. Yes, I'd like to show it, but my time is up. It's almost 9:30. It's time. Market's opening. I'm going to let Boris tune in. Boris, if you don't mind dropping in the community link, if you want to join our free community, and make sure you don't miss anything, Make sure you join our free community. I'm going to drop it here as well. Let me move this, hide this comment. You can also get the FOMC day link from our live trading community. I'm going to post that as well. So join our free trading community. And, we'll definitely be keeping you all updated on all of the opportunities. All right. Boris, you want to say hello? We do not hear you, Boris.
My mic was muted. Sorry, my mic was muted. I was trying to be quiet while you were talking. Hi, everybody. Hi. Somebody give me a hi. Give me a high five. Give me a wave. Tell me all is good. A lot of stuff going on here. First order, this is just a huge amount of stuff that I want to go through with you today. But first order of business is if you're trading futures, we are rolling to the December month. So let's make sure. I should probably take the screen. Let me show you my screen, actually. Okay, should be able to see my screen. We're rolling futures. I'm also long gold a little bit. We'll you can monitor that trade with me, targeting 91.9. I'll explain why I'm long gold in this particular configuration. It's hopefully going to be a good trade. But most importantly, you need to go and make sure that the December month now, which is the MNQZ or NQZ 2025, is your mark. All the futures in NASDAQ, in Dow, in the S&P are all rolling over to the December expiry month. This is the last week of September expiry month. So everybody's trading this as the front month, right? So let's make sure that we are in wealth charts. Yes, we're still trading both September and December. But what I'm telling you should be trading is December only, because all the professional traders are now trading December month. That's called the front month. That's the most liquid contract, okay? So if you're still got your September contracts, close them, put the December ones on, and start trading those, because that's where liquidity is going to be. That's where execution is going to be. Okay, so make sure you guys all do that. It's very, very important. Otherwise, you're going to be behind the 8 ball on that. Secondly, I've had some really interesting insights over the weekend as to how we can really optimize our trading. Now, one of the things that came up in our conversation on Friday, which was sort of interesting and surprised me a lot, was that there was a lot of you, and by the way, watch that gold trade out of the corner of my eye. We're trying to target 91.90. Hopefully we can hit that. A lot of you really like the idea of doing 1 or 2 trades per day, which was, obviously different from the kind of things where we're doing 10, 20 trades a day. And I totally understand that. And I think it's obviously very, very much easier to do, far less stressful, and can produce, in my opinion, even better results than the kind of scalping that we do. So one of the things that we talked about, and one of the things that I'm gonna constantly showcase with you guys this week, is how exactly you can do just 2 trades per day, which is the New York Open trade and the New York Close trade, which is super interesting. And it's actually a misnomer to say it's the New York Open, because the trade in the morning is really all about the European close. It's about the 10:30 trade. And I went back, I tested it for a couple of months, and it is money. The basic trade that you want to think about, and I'll show it to you guys on the charts perhaps today, but today we'll hopefully get a chance to do it. Anytime after around 10:15 New York, so the first 45 minutes we'll let the market do its thing, we start looking for the Christmas tree trade, the Christmas tree label trade, in the direction of the trend. So if the overall trend is positive, we're looking for the next green label. If the overall trend is negative, we're looking for the red label. And if the labels are against trend, we don't take them. We just don't take the trade. We don't do anything, right? So that trade at 10:15 to about 11:15, 11:30. If you get that signal anytime, and that thing hits like 8 out of 9 times, meaning that 8 out of 9 days you can place that trade for, let's just for argument's sake, $100 target, $300 stop. You're going to hit that target. And the second trade that works really, really well, same concept, but this time we're going to start looking at 3:15 p.m. as we get to the close. Can we get a trend-based signal on continuity? And that trade works also well, not as well as the market opening trade, but well enough that it certainly gives us a positive edge. And of course, if you think about this, it's all about how games are played. If for those of you who are like used to the American football metaphor, or for those of you in Europe who are used to soccer or European football, you know that very often most price action happens in the last 2 minutes of the game, right? It's somehow amazing how like the game is boring, and in the last 2 minutes everybody gets crazy, and a lot of times you get scoring opportunities. And it's the same thing in the stock market. Sometimes you get a very, very boring price action. Good job. We're done on that gold trade, and I'm going to show you the next really high quality idea. This is the one that I was doing with you guys. So the point behind our momentum dot driven trades is that optimal times of momentum give us the highest probability trades. You can just do 2 trades a day, knock it out of the ballpark with my BFF dots indicator, which is only available to coaching students. So you want that, go out there, get it. You get it for 6 months. You get my coaching for 6 months. It'll be the greatest deal you're ever going to get. It's funny. I have like somebody just emailed me saying, hey, this academy is asking for $10,000 of my money to coach me. Do you think it's a good deal? And I'm like, fuck no, it's not a good deal. Okay. It's ridiculous. When you guys know that our coaching at $500 is a million times better than whatever somebody's trying to scam you out of $10,000 of bullshit. You don't need to pay $10,000 to anybody for anything in this game to be able to trade well. So hopefully those of you guys who are serious, take the offer over there on the coaching, get the indicator, and be able to take those two trades a day if you like that, right? So that's one idea that we'll put into practice when the time comes. And I'm definitely going to do it with you all week long with you guys, so you're really going to like that. Now, the second thing that I kind of wanted to share with you is the idea of slowing down the pace of trading. Would you like truly super selective setups, like what I think are the absolute diamonds on a platter setups using Christmas tree setups? If the answer, I want to see 10 yeses in the room, and then I'll show you exactly how I made money in gold and why that setup is money, and why that setup has been money for me all morning long. As I hit like 4 out of 4 of those setups. Tell me if you guys want that setup. So, there's XLB. XLB gets the extra love today because she actually showed me some serious thing. Okay, I'm getting a lot of yeses. I want more yeses. Let's go. 10 more yeses. Everybody not from our coaching room, everybody who's new. If you're new, you have no fucking idea what you're doing. You're clueless and you're a rookie and you want winning setups that are going to make you money. I want to hear you say yeses. Okay, everybody who's telling me yeses right now already makes money. So I want to hear from everybody who is not. Everybody who's having a hard time in the market. Everybody who doesn't know what the fuck is going on and why the market is always stopping them out and why they can never time the market. Those are the people I want to hear from, because that's who this is going to benefit the most. Everybody else who's telling me yeses right now already makes tons of money. You don't even need to know the setup. You already have all the setups in the world. Come on, I want to hear all of you guys who are new out there. Let's go. Kim. All right, I want to see faces and names I don't recognize. Santiago, nice to see you, man. Santiago says he's essentially new. No. There's 600 people in the room. Let's go, pussies. Let's go. I want to see some yeses in there. Naz is definitely going. Naz is having a nice little pop. So is gold though. All right, here's the money setup. See? Oh, thank you. Fortnite. I mean, this is what I want to see. He says he can't trade futures. I'm gonna turn you into a futures trader with this one setup. Okay? I'm gonna turn you into a futures trader with this one setup. Let me show you what the setup is. We can do this on gold, which is actually the shittier version, or we can do this on NASDAQ, which is the good version. Let's do it on NASDAQ, which is the good version. Because you can see me making all this money overnight in the setup. But let me show you the full setup. Okay, I'm actually going to give you a full screen. I got my little, check this out. What the hell is this thing? This is it. Oh, look at this. Looky, looky, looky. I'm back to my magnifying glass. Pretty cool, right? All right, let me show you the absolute forensic structure of this setup, right? So step number one. So first of all, those of you who are new, we use the 200 period SMA, which is the long-term period SMA, and the 8 period SMA right over here, right? When the 8 period SMA is above the 200 period SMA, that's positive trend, right? So uptrend. You can see we're obviously above it. We're an uptrend. It's positive trend. When we're below, that's negative trend. That's step number one for anybody who wants to understand what we're doing. Step number two, let me get a little bigger, right? We are looking not for the first green label on the uptrend or the downtrend, but for the second. This is the money trade. This is the trade that will almost never steer you wrong. This one will fake you out. This one can fake you out a lot, but this one almost never fakes you out. If they give you 2 greens at the start of an uptrend, you can feel pretty confident there's going to be continuity. And boom, 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 of course, there's continuity. We make money over here. We buy the 38s, we buy the 83s, we sell the 88s, right? You can see it right over here. Super easy money right then and there, right? Conversely, right? If they're going to give you the sell signal, right? The first one may or may not work, but the second one is always money. The second one is always money, always money. That's the trade. It's the second label in the break of the trend that is the money trade. So what does that mean? It means, yeah, you're not going to do 1,000 trades a day. There's only maybe 3 or 4 breaks of trend a day. But when you have that break of trend a day, and you really, if you can obviously scalp to your heart's content all day long. But if you want that precise, direct, rare, but incredibly effective setup for, let's say, one of your accounts, you can do that, make your money, go have a real life if you want to. So this is a super, super cool setup that everybody can use. Ravi, I don't have a gold intraday target, okay? And nobody in the world has a gold intraday target, okay? Up my ass is the gold intraday target, as it is up everybody's ass. Nobody can tell you where anything will go in the next 10 minutes, much less in the next 10 hours. So if you decide to hang your future trading on some fictitious idea of a target, you will always lose. I'm teaching you how to trade with precision. Pay attention, okay? So, everybody understand what I'm saying? The second break target is the money label, right? By the way, getting a little bit of volatility. You see the vol is really starting to break out. We're starting to see big expansionary targets. So what does this mean, by the way, in terms of our interpretation of the indicator? First of all, we're obviously going to be trading 10-30 because the range is big. So we're going to be trading 10 points, 30 point stop. But more importantly, this over here, if we're going to take it, we're not going to take it, but if we're going to take this has to be 1545. Anytime we have an orange label, that is in excess of all of the stop conditions that we have. Therefore, we have to expand our volatility and increase our size. All right. For those of you who are new, don't worry. All of this We will go over and over and over again every day this week. We trade every day live. Just come hang out with us. Come do your thing, and you're going to really, really like it. But that is the money trade. Now, the secondary money trade, it's a good trade, not a great trade. And this is going to be super interesting to all of you guys who trade retrace, right? There's two ways we can trade. We can buy high and hope it goes higher, or we can buy the dip and hope it bounces, right? Same and inverse to the other side. So when we buy the dip and hope it bounces, that's the retrace trade. So on Friday, I had this incredible epiphany, incredibly interesting epiphany, which, by the way, you can see happening all day today, all day, every day, which is this. Let me see if you guys looking at this chart can try to figure out what is the truly great retrace trade with the Christmas tree labels. Just looking at this chart. Anybody want to take a shot at what is going to be like, oh, this is so fucking obvious. I can't believe I didn't see it before. Anybody have any idea? You want to try to volunteer? Give me some chat in the room. What do you think? No clue? All right, I'm going to tell you. So let's go to this. You can actually see this in like a little bigger setup. Somebody's saying 916 candle. No. Guys, no. I know this is why when you see that it's so obvious, you're like, oh my God, I can't believe. And it's because we're all conditioned. I was too until I finally saw it. So check this out. What trend are we seeing here? Let's question number one. First one to answer it gets $1 million of Monopoly money. What trend are we seeing here right now on the chart in NASDAQ? It's an uptrend, right? Christopher is right? So in an uptrend, especially like a beautifully clean, trending uptrend, what's the best entry trade? You know what the best entry trade is? The red Christmas label. That is your retrace trade. That is the money trade. That is literally buying the low every fucking 10 minutes. Boom, 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 boom. Wham, bam, thank you, ma'am. Every time I hit this hard, I get the money in my account. Isn't that wild? It's the red retrace. It's the red Christmas tree that is actually a really cool retrace. Now, obviously, it's going to fail you. It's going to fail you when we do an upside down V. It's always going to fail you. But you know when it rarely fails you? You know when it almost never fails you, and where the retrace trade is what I call the second money trade? Do you know when? Do you know when it's a really, really, really high value proposition? No, the red Christmas tree. Ignore the purples and the greens. It's got to be the label. The label itself is what you're buying. Okay, Santiago. You know what? It almost never fails you when it's the first red in an uptrend or the first green in an uptrend. The green doesn't work nearly as well, but the green did the work over here. This is a downtrend. First green label. I sell it. I buy it. I sell it. I buy it. Here I buy it. I sell it. Right. That is not after the second buy, before the second buy. The first retrace trade in uptrend is a low risk, high probability entry for your scalp. So you have two ways to kind of trade the initial trend construct right over here, which is super cool, right? Now, yes, sometimes you go 2 or 3 hours without one of those absolutely rare clean setups. But if you think about this, one of your accounts that you could use to trade that is all you need to be able to execute those, that sequence of trades. Yes, range bound markets are always going to be difficult. One of the ways we survive range bound markets is by looking at our range volatility, right? But if you see over here, range volatility was quite good. It was like 30. Like if you want to go back to replay, watch this. If I go to replay, the range here was, where is this? Range here was 44 points, more than enough to for us to trade. It's only when the range goes red, when it's like 20 points or below, that we don't really want to trade. But in any one of those conditions, the range itself was absolutely perfectly fine for us to be able to trade it. So yeah, I mean, you know, you can't win them all, but we basically have the tools to control them as much as possible. So you got two super cool trades for that purpose, which I thought was kind of cool, right? Now, third order of business that I want to talk to you about is every Monday, and certainly this Monday, let me just change the layout here for a second, guys. Hang tight. I'm going to change the layout to this and this. No, not this one. This one. I want to talk to you a little bit about CFDs, because we trade futures all day, every day, all the time. But 50% of you are coming from places where you trade this on CFDs, and even like 50% of you more can't even get an account with Apex Trading because you're coming from markets where Apex does not do business. But ACAP does business everywhere. Everywhere in the world you want to have an account, you can open an account with ACAP and trade all these same setups in the exact same way on MT5. And so what I wanted to show you right now, let me see if I can do this. Hang on a second. I got to share something. Different. Okay, I'm going to share screen. Share screen. Do this share. Okay, cool. The exact same indicator that we have on what do you call it? Hold on a second. I'm sorry. I want to move this up. I want to make sure that I got this right. No, I want to do this. Oh, hang on a second. Okay, cool. The exact same indicator with the exact same dots, with the exact same Christmas tree labels, you know, red or green, is fully available on MetaTrader 5. But not just that. The indicator plus my trading tool, which allows you to do a million different things that are so cool. Let me show you some things you can do. I can just buy gold right now, and you see how it automatically puts a stop and a target on my gold at, like, let's say, you know, $1 up, $1 down. It's $1 target. What if I wanted to put my stop at $3 away? I can just go 300, change my stop. Okay, totally change my stop. What if I wanted to make my my target like 50 cents? I could just go 50 and change my target. I could do a million different things in this thing. What if I wanted to enter another trade in gold like this? I could just enter this, get a secondary trade with the stops and targets. It allows you to do anything you want, because I personally designed it for trading in a single one-click fashion in any product, anything in futures, anything in this. So the bottom line is, if you guys, I know that. Oh, by the way, I guess we made money, right? I wasn't even looking. You see how fast that was? And you imagine being able to make money like that without you having to do anything but press a single button. That's what this one-click indicator does, and it's possible to do it in Forex, it's possible to do it in crypto, possible to do it in gold, whatever you want. But it comes with my indicator and my one-click for just a $500 deposit. Or if you already have an ACAP account, go out there and just add an additional $500, and I will send it to you by zip file. Somebody had asked me for the product over the weekend. That Chris, I already sent you the latest version. So this is the fully optimized, 100% synchronized version that you have on TradingView. Now you have it available on MetaTrader 5. So yeah, the police, you know, I'm making so much money, you got to put me under arrest. That's how it goes today, Dr. D. So the point is, and Chris says it's awesome. See, I did not even pay him money, because honestly, I literally did not pay him money, because he got this for free, because he made a deposit. Go out there. If you have a MetaTrader account, you cannot live without this tool. I guarantee you, the moment you have it, you'll never ever want to go back to trading the same way again. Single button click, everything preset for you. You can sell half, go to break even, all automated. It will tell you the next closing position. You can close every trade you want with a single button, or you can just close one chart with a single button. You can do whatever the hell you want. I made it super, super, super efficient for one-click trading for truly the CFD trader. How to set this up? You literally drop it in. It doesn't require any setup. You drop it in, like, let me show you, okay? Let me show you. I'm gonna delete this. I'm gonna remove it. The only thing you do, right? I'm gonna drop it in, right? The only thing you do is you just simply click Allow DLL. Just say that, say okay, and you're good to go. It requires no setup. I made it for you guys. I want a one-click life. I live in New York City. That means I want a one-click life for everything. And of course, I can't get that all the time, but I can definitely get that on MetaTrader 5. So if you are a MetaTrader 5 client, go out there and go do this. Go open an account with these guys. I'm gonna put the ACAP link right now for everybody. And if you want it, all you got to do is just make a deposit, send me a screenshot, and I'll send you the tools. So have a great time. We're gonna do this every Monday with you guys, because I live trade this setup every Tuesday and Wednesday. I'll be trading it with you this tomorrow and Wednesday. Although next week is Jewish holidays, so I will not be trading it with you next week. But this week I'll be trading it with you. So if you want to see me trade this live, it's the perfect setup, and you can trade it with me with the same tools that I do. Okay. I love doing this, and I think you should too. So hopefully you guys will enjoy it. This is the best thing that I've designed for the MetaTrader 5 platform, and all it requires is just simply having an account with our friends at ACAP for just nothing, for $500. Okay. All right. So let me go back to the futures charts, because we're kind of getting to the 10 o'clock hour, and I want to show you a few more setups. Any more questions? Any more questions on MetaTrader? Okay. Yes, no? Everybody got that? Okay, cool. All right. All right, let's change ourselves around a little bit to futures. Let me change my futures. And, you know, we are looking at 24.5 all-time highs. Really strong, right? Really strong moves here in NAS. And let's see what gold is doing too. And gold is doing that. So by the way, that second, excuse me, that second green label in gold, that was the trade that I was holding that you guys saw me trade at the beginning of the session, right? That was a trade in here, out here. Sorry, in here on this trade, out here. This was actually, I bought the retrace. I bought the retrace, made money on the retrace, and then I bought the second label breakout. So if you like doing more with less, this is the setup that you guys all want to have. Okay? And of course, the only way you want to have that setup is with our friends from Apex, because they're giving a huge discount right now. So if you get the accounts with them, you can literally do one account that just does nothing but, let's say, these selected label trades, another account that maybe just does a one-day trade, and then a third account that does nothing but scalping all day long. Whatever you guys want to do. this thing really opens up massive, massive flexibility and opportunity for you to do what you want to do, right? So clearly we have positive trend. It's getting to the 10 o'clock hour. We're going to wait till about 10:15. We'll see if we can get a green label in NASDAQ to be able to do our one a day trade. But we've had a really, really strong breakout here, so may not be able to get a move. Usually the 9:30, 10 o'clock hour is kind of a sloppy time, and then we get trend later. But today we have a change of pace where the trend is happening now, right? Yes, great. Thank you, Ryan. It's dirt cheap. Like I said, you can buy 10 of them, and I recommend you get 5 of them because you will need them. And they, I think the dirt. I don't think that's like less. It's less than a couple $100 for 5 of them. Whereas a normal prop account starts out at $300-400, right? So I don't, I don't. It's not even a comparison. Is 8-cap available now? It is not available in the U.S., Laura. I'm sorry. It's the only U.S., U.K., and Australia. I can't do it, but everywhere else it's available. Yes. Yeah, it's a really, really good deal. So let's do a little poll while we're kind of chilling out. We got nothing coming up here. The trades are all done. It's one of the best red folders to pass evals. And maybe, Fabio is referring to our, hunt and punt trade where we kind of take the position in front of a main event and see if we get volatility to kind of to make our thing work, to make the trade work for us. I honestly don't think so, Fabio, because it is one of those wishy-washy, oh, I'm going to do thing, but then I'm going to do something in my dot plot, and then I'm going to do something in my statement. Like, it's almost never unidirectional. So honestly, I actually would not burn my money on this, on FOMC as an event. We did a great job on CPI. When you have economic news, it's very binary. It's yes, no. NFP, CPI, PC. Oh God, what's the PC? The price. The Fed. I forgot the name of the term. Whatever. Like 3 or 4. There are 3 or 4 news events that are very binary. The Fed rate hike is only binary if it's a surprise. If they come in 50, absolutely. But I don't think PC. Thank you. PCE, PCI, PPI. Just PP. Just pure PP. They all turn into PP afterwards, right? Unless they go 50, which they may. I mean, maybe worth a punt. If you're trading for 50, for sure you're going to get done. For sure you will get funded. So that's really going to be the trade on Friday, on Wednesday. Sorry. That's definitely going to be the possibility. Retail sales could be, Wally. Unfortunately, I can't do it tomorrow because I gotta take care. I gotta take my daughter to school. Might be a possibility. Might be a shot. I mean, I wouldn't be fully opposed. It's not. It's kind of a tier 2. It's definitely not. It's not like NFP or there's 2 tier. The tier 1 events are CPI and NFP. Right. Those are the top. Those are the top binary events against which you can really, really trade for a surprise. Tier 2 would be retail sales, and the very hit or miss is the FOMC. They almost never surprise, so there's almost never really a big burst one way or the other. But when there is a surprise, the burst is enormous, a couple hundred points just in the 1 second move, right? They go 50, Nasdaq could go to they go 50, gold goes to like 3,800, Nasdaq goes to 24,700, some crazy ass numbers, and then tries to run to 25,000. It's totally possible. I'm not discounting it. Nico, comment on gold trade Christmas 356. Sorry, what is 356? I think you mistyped it. Tell me what tell me what you want. So what do you guys think? Let's do a little poll. Let's see what everybody prefers. It's going to be a very binary poll. I want to trade once. Sorry, your choices are once per day. Let's go all day long. Let's see where everybody lies on this division. So the poll today is: I want to trade once per day, or I want to scalp all day long. That's not a trade for me. On gold, why would that be a trade, Nico? Unless you were going counter trend. I mean, this is a pure scalp trade. Yes, you could have taken it as a scalp trade, but it's not. It's not under these select conditions that I had, and it's counter trend. So I'm glad it worked. I mean, gold always is a interesting counter trend. My recommendation, Wally, is that unless you have high conviction they're going to go 50 basis points, you're not going to get the straddle you want. That's all. This is my opinion. Okay. As we say in New York, opinions are like assholes. Everyone has them, right? So you can take it for all it's worth. But I would not be positioning. It's always an indication of going in, William, if you are trading sort of like if what you believe is that there's lots of continuity. I mean, basically what you're saying is, every time there's a green trade, which is a momentum trade, I think there'll be more continuity. Eventually, you're going to be wrong. Probably right now, you're going to be wrong, right? You're coming up against 24.5, a pretty interesting round number level. All of those ideas are very small edge. They are marginally, maybe a tenth of 1% better than guessing, in my opinion, right? The things that I'm showing you are truly strong edge, but they're the better the trade, the rarer the trade, right? If every trade was 9 out of 10 and you could do 100 trades a day, you'd be a billionaire in a day. For example, like the guys like Virtu and Citadel, who trade millions of trades a day, their edge is only like 50.5 against 49.5. I think they're barely. I think sometimes they're even worse than casino odds. But they're just doing it on volume, so they don't care. But we don't have that luxury of doing 1 million trades a day. So we need to have like 8-to-1 edge, 9-to-1 edge, not like a 1% one way or the other way. So how do you trade? I'm sorry, I don't understand the question. I gave a whole bunch of setups at the beginning of the show. You have labels that give you trend trades and counter trend trades. You can use those, which are filtered already for you. You're not getting audio video? Log in, log out. You guys hear me okay? Somebody give me a yes, no. Yes, you hear me okay. Yes, yes, yes. Or did I lose you guys? Okay, all good. I would say the wealth charts is going to be a week from now. Everybody at Wealth Charts is away, so I sent them the code, but it's up to them to put it on there. Is that a retrace on NQ? It is, but it's not a retrace that I would take. Remember I said that the good retrace is the first retrace, right? Is the first retrace. Like the red, is this a Christmas tree trade? You could take it. It's not even a Christmas tree trade because the slope is actually positive. But you've had this massive move up. Why would I want to take this? Pretty high probability this could be a V shape the other way around. I guess what I'm saying is, if you're chasing trades, you can definitely do them, but you should do those in very, very small size because your edge is going to be much smaller. Whereas my edge is really, really good when I'm kind of selecting for the best ideas. So like I see 2/3 of the room is scalp all day long, or like 60% of the room is, no, 2/3 of the room is really scalp all day long. So if you're going to scalp all day long, then you got to do tiny positions and take the signals as they come, because you're going to get more stop outs, and what you're really hoping for is like 12 out of 15, right? But if 12 out of 15, you're going to be hitting 3 losers, and it could be sometimes 2 in a row, and then you have to really, really spend the next couple of hours making it back. A blue candle is just a candle that lands directly on the moving average, right? It's sort of straight up on the moving average, so that's why it's neutral. So your long retrace trade is with Christmas tree with negative slope? Yeah. In other words, it won't show up unless I have a red label, which means it's going to be negative slope. Yeah. Right, and Christopher likes to use the purple against the green slope, which is a really, really good retrace trade too. So he buys it here, he buys it here. He does a good job. You're not going to find nearly as good a ratio on gold as you will on NASDAQ in those things. Gold is, in my opinion, it's much more difficult to trade. And really with gold, I only kind of trade that, that second buy label, second sell label as my best idea if I'm doing selective stuff. That is the best. Yes, those are the best setups. So we're kind of getting, was it 10:15? This is going to be interesting. Like this is really going to test my mettle to see if we can make this trade work, because it's getting that past 10 o'clock hour. We could be setting up for a Christmas tree green label, right? This is like the one trade a day, but we're coming in at the absolute height of this move. The probability this thing is going to get done is going to be very problematic. I'm going to go smaller size. I'm actually going to go this size. I'm going to go one size. I'm going to go to 10, 30, 10-point target, 30-point stop. And if we get a green Christmas tree label, really I should be waiting till 10:15. But like anytime after 10 o'clock, that should be our true trend trade of the day. But today is a super interesting day because usually the 9:30 to 10 o'clock hour is very choppy. But we had this incredible power move through the open. No, Gloria, what you need to do, Gloria is asking me, she's not getting the orange. You need to go to your settings. It's all controlled by settings, right? So what you do is you go into your Christmas tree and you can say tick threshold for orange highlight, right? And how big a setting you want for the Christmas tree label, right? And then if you want to go into the table, you go range row settings and you want to set those up too. So it's in the settings, depending on how you set them up is where you're going to be able to get the looks. So what I do is I put 120 ticks for the Christmas tree label, and that will for NASDAQ that will turn it orange for me. Does that make sense? Yep. Cool. It's group coaching, J-Boy. We get together every Thursday night, 7 o'clock, and we just we talk about advanced techniques, sizing, psychology, you name it, anything that helps. I got it. By the way, speaking of which, I got a super interesting video that I'm going to be sharing on my X channel and my Insta channel. But this was such an interesting point this lady was making. I stumbled across it this weekend, and I'm going to share it with you guys because you asked me about J-Boy, you asked me about coaching, and this is one of the most interesting aspects about coaching. So, and I say this as a straight A student, I 100% agree with her. There is nothing more toxic in life than education, than formal secondary education. And I'll explain to you why. Because when you're in school, right, here are the things you learn. You learn that there's only one right answer, right? That performance is individual, right? The performance is individual, right? And that, what was her third point? And that everything is kind of like a do or die situation, right? Oh, and that there must be a right answer, and you have to achieve it. And so every one of those beliefs is the exact opposite of how real life works in business. If you think about this, all successful businesses are collaborative ventures, right? They're always a function of multiple people coming together to create something interesting and unique. There's almost never a single correct answer to something. It requires lots of experimentation and flexibility. And it requires an open mind, to your opposite position. And all of those things are absolutely true for trading, which is one of the things that is really great about coaching for those people who are not around, is that so many great ideas come from other traders in the room who are seeing nuances in the setup that really help them. For example, Christopher's whole purple dot retrace setup that he's been working on works like money. And that was a result of somebody contributing that. A lot of the volatility stuff that we came up with was a function of people's input. And so my point is coaching, what's so interesting about coaching is it's not whatever random crap that I'm going to be speaking out of my mouth. It's the collaborative aspect of it that's really, really cool and really valuable, that you guys could hopefully benefit from. Well, that's what we do. The whole name of coaching is pass the prop, J-Boy. That's what we specialize in, right? That's what we specialize in. So welcome aboard. If you want it, the coaching link is over here. Come join us. And May just joined us last week or maybe a week and a half ago. She already passed her prop. Nothing gives me better pleasure than that. Oh, you got to be an A student. That's one more they teach us. Yes, you have to be an A student, which is complete nonsense. Because real life is all about failing, right? It's all about failing. It's all about getting Fs. It's getting literally 7 Fs in a row before you actually figure out how to do something. So yeah, I mean, these are all things, and it's coming from somebody who has been a straight A student his whole life. And that was a massive stumbling block to my success in trading, was precisely that. To this day, I still think that's my greatest weakness, is because I was trying to be too smart for my own good. And that's a function of really interesting how we are indoctrinated culturally to not be able to trade well, precisely because of all those reasons. Okay, so we're getting interesting, right? Now we're getting into that 10-15 zone. So what's happened? Market really popped up, right? Are we going to get a chance for a buy label over here? That's the key interesting. Are we going to get maybe a little bit of a sell-off and then a nice big rally? back up to the 24 500s. We'll see if that happens. If this comes down all the way down, then we just wait to see if we can get the green label 10, 15 minutes later. But that's going to be our one morning trade of the day that we're going to try and focus on for those of you guys that want to try and do one trade a day. The Cowboys need my Tam. I am come from Washington, D.C. area. I have never in my life rooted for the Cowboys, okay? When I was growing up, it was Joe Theismann and, oh my God, now I'm losing my mind, John Riggins. And it was the greatest teams ever, man. Back when I used to watch football. Redskins all the way. Oh, sorry, what are they called? Commanders now? I forgot. What AI did I use for the songs? It's called Suno, S-U-N-O. Suno is the AI we use for songs. So I will say this, guys, it's a lot less activity if you sort of reorient yourself into like, let me just look for for quality setups. But it's also a lot less stress. You're not like a monkey, like a dopamine monkey hitting the buy button every 5 seconds, or the sell button. So choose your poison of how you want to do it. The other thing is that it absolutely is a much better approach in NASDAQ than it is in gold, which is just notoriously spiky. Every losing trade I had today was in gold, and I had to make it all back in NASDAQ. And then I finally started to get a little bit better in gold. But look at gold. I mean, look at this shit. Like right up and down. There's just no continuity. Remember, ultimately, what are we trading? Continuity. And gold had no continuity whatsoever. With a really crappy little structure today. And the other trick, if you want to increase your trade possibilities. So you know how I said, like, it's the second breakout? Well, in this case, I think it was, in this case, it really was the second breakout, 79. This was. But occasionally you're going to get like a big move, and then the moving averages get compressed together. And if they start coming back apart, so they compress and they start coming back apart, that's a really, really good sign that it's like essentially a fresh trend coming up. And you pop that up. You pop that up, and you can take a second trade in that cycle, right? But look at gold. Like this is, first trade. The other thing is about gold is sometimes just gives you really horrendously terrible setups. Like this was the first red label, but it's really on the crossover. So you go to the second label, and by that time it's sold so hard that you get stuffed out. You literally get stuffed out. Much harder to trade gold, in my opinion, under any circumstances than NASDAQ. And if we're sort of going to trade gold, you almost want to trade it to the upside. That's it. You don't really want to trade gold to the downside at all, because it's an upside skewed thing. So whenever you get a nice clean upside trade, that's all you want to do. Or if you kind of want to be that contrarian, you try to take the retrace trade using the red Christmas tree candle. The reason why the red Christmas tree candles are so interesting as a retrace trade is because it's the momentum spike down. And if you think that the trend is still up, then this spike down is your literally cheapest, best entry into this thing. Mean Joe Green, Dick Butkus, Lalo Sato. Of course I know them all. Howie Long. I hated the Raiders too, man. So yeah, just waiting patiently to see how the setups can go here. But See, like, for example, you know, if you bought this over here, this was a 94.6. It was actually a $2 pop. You could have bought this. You could have bought this. On the other hand, buying it here, you would have been stuffed. Gold is just notoriously difficult to handicap with a lot of degree of confidence. That's why I kind of just stick to like that one trend breakout trade. I take that, and then everything else I leave alone. NAS just kind of had a big rally, and now we really died out. Nothing is good on here. The 86 Mets. You mean the cocaine Cowboys, Dr. D? Oh. I'm also a Yankees fan, and my whole family, all my dad's family is from Boston. So you can imagine how well that goes there. Do you know what the favorite saying on Boston radio, sports radio is? You know what they do in order to get by the censors? They always go, "Yuck the Funkies." I hear that 1,000 times when I'm in Boston. What tick did I use in gold? I used 1030 or 2060. 2060, when the volatility range is orange, is a 2060 trade. Similarly over here, volatility range is orange. It's a 10 point, 30 point, or a 40 tick, 120 tick trade. So we really have, like, the beautiful thing is that the table now really gives us a good reading for what we want to do. Ali says that on paper, I've taken all the signal for NASDAQ from Asia until open till now. You mean every Christmas tree signal? What signal did you take, Ali? Do you mean 23 longs? All longs. Every long was a winner, but the shorts were 6 losers, right? Yeah. Sorry, I didn't quite read it. So, but what were you using? Were you using 510? Were you using 1030? What were you using on your longs? What kind of a volatility wrapper were you using on there? Ali, by the way, is one of those students that has just managed to just pass probably 10 days. So you're using what's 20? Is that in ticks? 2080 or sorry, or so you're using 5 points, 20 stops. It's a big, using a bigger negative risk reward than I do. Yeah, guys, you won't see anything on the wealth charts that you see on TradingView because that has to be all updated. So that's you know, we finished the final version on TradingView, which was last week, and now we're going to try and put that version onto the thing. So what's interesting is that Ali is basically saying that, and this is true, if you can pick the direction, if you generally have, you know, high confidence in the direction of the product, which in this case NASDAQ was pretty much a buy to dip, buy, every long trade worked. You didn't have to worry about trading with trend or against trend, right? You know, it'd be interesting, Ali. What if you back tested? If you bought all the reds, like if you bought all the reds, would you still have 17 shorts with 6 losers, or maybe you have less losers? Like, in other words, if you use the reds as a retrace trade rather than as a continuation trade, that'd be super interesting. William, you could always use the replay function in TradingView. You can't really trade on the weekends. It's a little bit hard. You know, the future markets don't work, but you can use the replay function to just try to. And I believe they now have like a here. I believe with TradingView, people are asking me like how to create all these. Let me see if I can do this. Where is there is I forgot, I think you can go trade. Yeah, you could actually buy, sell in replay and just, run your trades that way. I believe you can do that on replay mode, right, guys? Oh, maybe we're gonna get lucky here and get a green label pop. Not necessarily on this candle, but maybe on the next candle. There is a replay mode on Wealth Charts as well. Yes, you can just contact Wealth Chart support, and they'll show you exactly how to get it. So you know what's interesting about the poll today is that everybody started as a degenerate trader with fully 65% of you wanting to scalp all day long, and as the poll got older and older and older, and you guys kind of hung out, it evened out. So sanity has taken over. Buck 1 on the clock. Let's watch this, guys. Let's see if my one trade a day can work today. It's got to obviously stay. We got to hold the position, hold the pattern. But this is what I would want to do. Positive trend, the 10:30 hour. Are we gonna make this a play here? Let's see. Seven seconds left. All right, I'm in. 507 is the target, right? Let's see if we can get a continuity trade here on NAS. Oh, you know what's been happening that's really, really weird? My DOM, I don't know if you guys are having the same problem. My DOM defaults to gold instead of NASDAQ, and I can't get it. I can't change it for some reason. It really drives me crazy. I don't know if you guys are experiencing the same thing. I think it's some kind of a glitch in TradingView today that just doesn't. Maybe it's because we changed roles and it's having some issues, but it's just really annoying. The ticks is 40 by 120. Here, I can actually, by the way, here's my little, see this? It's 40 by 120. That's the ticks ratio that we're trading, right? So it's 10 points to 507 is our target. That's what we're trading. The size is completely variable to to your size. I'm trading tiny size just because we're doing this for demo purposes today, just to kind of show you proof of concept of the idea. Oops. Oh, is there news? No, there wasn't. I thought it was like it's 10:30 or something. I thought something popped. Wow, that was kind of a weird spike, right? Did you guys see that spike? It's kind of like up and down. And it may not work. Today, as I said, today is a very unusual day because we had this huge trend beforehand. But we're sticking with the process because that's what this whole thing is all about. It's just trying to trade the process, right? And then we'll see how it works. The stop loss in ticks, right? I keep showing you. Hang on a second. It's a 40 tick, which is a 10-point target. 120 tick stop, which is a 30-point stop, right? 1 to 3 as we always trade. That's how we configure it. Okay. Yeah, GFAS, I will add the alerts, yes, for Christmas tree. Yeah, I think, I think we have it. I just probably misnamed, but I'll put a version in there that just that does that. No, I never said 1030 ticks. I've always said 1030 points. So that's why the confusion. That's why I keep constantly correcting people on the thing. We're never trading. Whenever I'm giving targets, it's always in points, just because people get so confused on the tick side. The main thing for if you're new, the most important thing you need to understand or you need to learn, by far the single most important thing you need to understand is how many ticks are in each point of an instrument. Because in S&P, it's 4 ticks per point. In NASDAQ, it's 4 ticks per point. But in Dow, it's 1 tick per point. In gold, it's 10 ticks per point. I don't make the rules, but you need to know the rules. That's the thing. Because that's the number one thing that novices always mess up. And you just really, it's like multiplication tables. You really need to know them cold in order to understand how to trade. Because people are always, they're going to be shouting numbers at you. And if you don't know how to translate them into ticks, you're going to get lost. I'm going to close up. Tell me if you guys have the same problem. Look at me. See, I open it up, NAS comes up, and then it kind of disappears. Or maybe it'll stay right now. We'll see. Okay, now it's staying. Before it was just really disappearing. Yes, that's correct, Ryan. That's correct. Don't forget, tomorrow night, Wednesday night, if you want to trade Asia with me on MetaTrader 5, we'll trade that with my scalping tool there. Please come join me. Obviously, we're going to trade regular trade tomorrow. Then Kathy's going to do. We're not going to trade FOMC until 2 o'clock. There'll be no morning trade in FOMC. And then if I can, I'm going to try and do marathon trading on Thursday. And then we'll just have fun, because in marathon trading we can do like we can do lots of different accounts, lots of different strategies. Maybe we'll even do hey, let's just scalp all day long on the marathon side of it, right? But honestly, sticking to just 1 or 2 good setups off the hourly trend or off the the trend setup is really going to pay off for you guys. This trade is very slow today. It's clear that today is a very unusual day in terms of finding that trend move. As I said, the trend move usually never happens in the first half hour, and that was probably a good clue for us that's not going to be a trade that's going to work. That's why I took small size. That's what the longer we go, the less likely this trade is going to work. This trade is supposed to work within 1 or 2 candles because it's a continuity trade of the setup. But this thing is just dead. Nothing has gone on. The market just sort of did all its business before 10:30, and now it's just kind of dicking around, waiting around. So maybe we'll get another opportunity at the 1550 hours. Closing the window can fix the issue. Yeah, thanks, Calvin. It looks like no. Oh, you mean closing this window? All right, let me try this. Hang on, let's try this. We're gonna close this. I'm gonna go here. All right, let's see if a trading panel. Okay, we're in here. Yeah, maybe you're right. It did come up. Maybe you're right. Oh, and we do have like a buy signal in gold. We should probably take that. Let's take that. That's actually, it's the wrong stops and targets, but we will make them. So it's 701. It should be 699.4. Let's do it over here, and the stop is where am I in? 97. So it should be 91. I'm trying to trade this with a 2 target 6 stop on gold. Close enough. This is my gold position here. Let's see if we can make that happen here, right over here. That just means scalping gold, because obviously gold is a positive bid trade, positive market. We have, Christmas tree labeled before 11 o'clock. We're just looking for that little continuity to give us the oomph. Yes, it can be used on any ticker. Yes, it's fully, it's a trading view indicator. You can use it on. You can use it on FX if you wanted to. Gold is running. Gold got done, and we're still twiddling our thumbs in Nasdaq. So gold got done. At least, again, that was a pretty solid setup, because remember, we always want to trade with the trend. The green label gives us confidence that there's continuity, and gold has been just a pure positive trade trend for a long time. Gold has been that whole resistance, the 3,700. I'm telling you, we get to like 37.15, 37.20. Then it's going to be, all systems go for much higher. But right now, it's been that whole cement ceiling for gold. We just cleared it a little bit here, took what we could. And with Nasdaq, we're just sitting around, just waiting to see if they want to take it higher. But I'm not holding my breath. Christopher, good job. You bought the. So you said you bought the purple dot in Nasdaq. So you bought it at 87, and and you sold it at 97? Is that what you did? Let's go to the videotape. You bought it on the bottom on this candle here, and you resolved it over here. Is that correct? Yep, purple, purple. So one of the things that Christopher does, which is a really interesting trade idea with the indicator, is the purple dot, which is like a high sell-off, like selling off from a high level, against a green slope, positive slope. This gives you a pretty decent value entry. We call it value at trend. You buy over here, and then he was able to just pop it right here and resolve it. So he got a better fill than I did. I'm basically trading continuity, and there's just been very little continuity. Like, it's just not having any. There's no rocket fuel at all going on right now. But he was able to just scoop it up below and sell it, above in a very quick move and get it done. What do you call it? Magnifying glass is pretty useful, right, guys? Actually, I forgot about it. That's a really, really good tool for us to use, right? So the next interesting trade, for those of you guys who are looking for trades, let me go to the calendar. Let's pick, I don't know, last Wednesday. I'm going to show you. Oh, I think the problem is that we're on a, it's the December contract. It's probably not going to work. All right, let's just see if this works. No, it does work. So this is what I mean. after 1500, make sure that's got to be after 1500. Trend is negative. The first Christmas tree, you know, with trend, this one, boom, nice, clean, and you're done for the day. You know, that's the trade that you're hunting when you're doing this. So very, very cool. A lot of fun. That's how it goes. All right, let me see what's going on over here. $507 is my target. God, this thing is just. Daniel, there's really no information about Apex. You know, you just simply can go to their Apex website right over here. Let me show you how to do this. You go to Apex website. Let me put the link in here. That APX. You go to the Apex website. I'm going to log into my own account here. Because I'm a customer, they're going to ask me to authenticate myself. So they're just going to ask you for an authentication. 715641. 715641. Confirm. And all you need to do is on the right-hand side, you can choose either Tradeovate, which is the account you're looking for TradingView right now, or Wealth Charts, which is even cheaper and better. Either one, you can buy the account. You simply go over here. I recommend the $50,000 account. That's the best account. I don't know why the website, maybe my internet a little bit slow. And you say BK Save. It's very important you say that because that gives you the huge discount. Say BK Save. You click over here. You click Next. And it's a whopping $33 versus $167. It's a huge, huge discount. So go out there, go get it, have fun with it, and trade it. There's no better way. People always ask me, what's the best way to learn? There's no better way to learn than to open a prop account and trade it, because your downside is it. That's it. You have no money to lose. You get to practice on actual real money market numbers, and everything you do is really going to be going forward. See, I'm looking at this thing is still crawling. I'm almost, guys, I'm sure this trade is going to go my way, but I'm going to close this out at a minor win, only because I got to go. But the 507 was our target. I'm almost certain it's going to go to our target. I just wanted, the main thing is I wanted to show you proof of concept that this trade at the 10 o'clock hour with trend, generally, this took for the fucking ever. Like, it's always, every time I want to prove something to you, it should have taken 2 minutes. It's taken like 20 minutes and it still hasn't resolved. But it is, the point being is it's very much going in that direction. And that's the beauty of prop, is it teaches you real life. You don't get to, it doesn't cooperate with you just like the markets don't cooperate with you. You learn to have patience. You learn to have all this, which of course I don't. Does Wealth Charts have level 2 data? Yes, it does. On Wealth Charts actually has better level 2 data. Where's my Wealth Charts? Here's Wealth Charts. A Wealth Charts gives you really clean level 2 data over here, right? You can see it, right? And you can see it start popping up. We're like at 502. So yeah, it gives you the ladder over here. So hopefully that helps you guys. All right, I got to run. This may take another 10 years to get to 507. The world's slowest cop chase here, but it is in our direction. And again, it hopefully gives you an idea of what I'm trying to tell you, which is that the indicator, the momentum, the structure, all of that gives us that edge. Sometimes the edge is very slow, but it does give us the edge. Every trade we trade today, we hit, right? Every trade we hit. Just there wasn't as many trades as we could have just because the market was very slow. Everybody have a great day. I'll see you guys tomorrow. We'll do the same thing again, and hopefully you guys will get yourself reset. Oh, I don't know about that, Eddie. That's honestly, that's new to me, and I would email their support. I don't know why that happened. I would ask them. We trade futures because they're much more interesting. Because they are super clean, central book. There's no you're trading on the exchange, not off exchange, and because they move, like you blow your brains out with boredom. I mean, you blow your brains out with boredom today in futures, but doubly so in FX. We're almost there. By the time, if I keep talking long enough, this thing is going to go to 507 and actually make target. Who in the room is still holding the position and actually going to TP that position? It's unbelievable. How high was this thing? 506 was the high. Oh, man, what a slow day. But whatever. That's how it works sometimes. That's the beauty of prop. You really get to be exposed to all the good, the bad, and the ugly. So, anyways, everybody have a great day. I hope you really like the selective setups, because while they're few and far between, they are very, very good in their precision. Okay. So thank you guys. Everybody have a wonderful day. I will see everybody I'll see everybody tomorrow. But if you want to trade, we'll trade. I'm going to trade on the close as well. We're going to look for that 1500 hour trade to see if we can make it happen on NAS. Okay. Thanks, guys. Everybody enjoy. Bye bye.